the giving an education. It is helping you guys understanding, hoping that it will be helping you will answer your questions only and only relate to Moyo and FX. No other questions tomorrow. If there is other question, it will not be answered. It will be only answered if it relates to Moyo and FX. Okay. So please write down all the questions that you have. And if we do decide to do Q&A tomorrow, you can answer, ask the questions, or probably Thursday. So either Wednesday or Thursday, we are planning to do that. So that's about all. And there are still further development going on the Moyo. As it finalizes, we will let you know. So we will start today's webinar. MJ is all set to go. So sir, please.
Yeah, thank you very much, Bhavesh bhai. And welcome all of you again to my next session of webinar. I hope that all these exercises that I'm doing every day is helping people in some or the other way around tomorrow. If you understand all the basics of FX, it becomes really very easy for you to handle, customer complaints or queries, or because people have a lot of, a lack of knowledge in FX, because FX is something very new for many people, who are even the leaders who are sitting out here. I believe FX is quite fresh for them. So this exercise that I'm doing is just to, I believe, is very important for many people who trade in FX, because the analysis of the charts always help you to actually understand the movement of any particular asset class, and then you, based on that movement, you will be able to understand which side of the market you should stand and which side of the market you shouldn't be. Right. So yesterday I explained three, what patterns and stuff like that. Fundamental analysis is more like you are understanding the geopolitical nature that affect any particular currency, because of course we are trading in uh, in in currencies which are attached to particular country, and of course the the price movement of those currencies somewhere are interconnected to various fundamental analysis, like economic factors, the demand and supply, the geopolitical factors, sometimes elections, unemployment rate, inflation. There's so many things that we have discussed yesterday. So that is where it is basically affect the currency. And those fundamental analysis you need to probably understand in depth, before you start trading. And then third is a sentimental analysis, which is more likely based on the sentiments of the market. So as I mentioned yesterday, is the trader's view, that where market is going, how market will perform. Traders sometimes stand on the buy side or on the sell side, because they believe that the market will go this way. And normally people do make a lot of mistake by going with the sentiment of the market. Yes, sentiment of the market is always helps, because of course, if the professional traders are having a sentiment on any particular market, um, that the market is a buy market or market is a sell market, it gives you a pathway at least to understand which side of the market we all should go. But then you also have to cross check with the technical analysis and the fundamental analysis as well, that the side people are standing, and the which side market is showing a sentiment. Just to cross check, I think the technical and fundamental analysis always helps you to to put a stamp on it that yes, they are standing in the right direction. And I think this is the right direction. I should also be going. So all these three analysis, somewhere or the other way, is very, very important for trading. And I think this is where your trading skills starts with the analysis part. So rule of thumb is you guys should actually pick up any particular currency that you think you want to be mastering at. Um, it can be any asset class. It can be gold. It can be silver. It can be oil. It can be euro, dollar, GP, USD, whatever. You can pick up, two, three currency pairs or commodities or indices, and then do a thorough analysis. You know, so number one, you pick up the asset class. Number two, you look in detail the pattern of that particular asset class. Third, you do the checks on the technical analysis. Study for the last 3 months or 4 months data and see what was the pattern in the market. And then you also go through the fundamental analysis. For example, if you're doing a euro dollar, then try to either understand in depth about the dollar movement, the factors which are affecting the price and which will affect the price in the future. And then also, there are different websites online, as I said, Bloomberg, Dow Jones, and there are so many other websites that you can find. When you type send market sentiments analysis, you will see there are loads of websites which will pop in, and you can then browse through those websites, which actually gives you the insight of the sentiment analysis of what was the sentiment of the market in for the last 3, 4, 5 months in that particular market, which side majority of the traders would have gone, and that will actually help you to define how this market works. Forex is uh, the myth about the forex is you can become really rich overnight. That myth is that's still a myth, I will say, rather. And you cannot become rich overnight in FX, but you can for sure, depending on how you understand the product and the asset class. You know, and in all my conversation, I've always said that it's a uh, you have to put a lot of concentration into it. Okay, it's a business in it's a business in business itself. So when you want to do something, when you want to make your career into it, there's a lot of study, and that you all have to do around it to make it as your bread and butter actually. But trust me, once you get the grip of the market, once you understand how it all works, things will completely be different. Having said that, every time I always say that if you don't understand, we have a solution for you, which is Moyo. So um, you always go on Moyo, and an investor who doesn't want to take that hassle of going through the technical or fundamental or sentimental analysis at any stage, at any point of time, always have an option to jump on Moyo and follow someone and rely on somebody's experience and make money out of it. But the more you understand, the more you learn about Forex, the more you become confident. And then even if you are following a trader, you understand with your knowledge and experience that is this trader a right trader or not. Right? It's like when you are going for driving classes, you always rely on your instructor who is actually teaching you how to drive a car. But if I am a little bit experienced uh, driver, now if I have driven a car before, then of course I will understand that how this driver actually is teaching me. Is this the right method, or probably even if you're teaching me, I will correct something from my end as well, which I feel I know. So that will always help you, and that will always help you to understand things much quicker than when you are a layman and you're completely going to the new market altogether. Right? So far, in all these learnings that we are going through for the last almost a week and a half. I think I have basically covered all the major thing that you all need to understand before you start driving a new car. And I think this will probably help you, as I said, as and when you keep on practicing, you keep on trading. And I think this is the key to success, that more practice you put in place, the more quicker you learn on Forex. Right. And probably I'm not going to do a lot of educational seminars. I think probably by the end of this week I probably will be able to finish, or rather I will touch base almost all the major things that you require to understand, and then you will be able to implement that. Um, so I will not do any educational seminar from next week onward. Rather, we will do something a little bit different, for all the audience, that after 2 weeks of study, more or less, we will have interactive sessions, and those interactive sessions probably will help you to actually clarify your doubts on the FX, and probably that will probably help you more in details. Because if I keep on teaching you, you will understand. I can see that every day probably around 30-35 people uh, comes and join the seminar, and then which is not enough compared to the lot of people who have already come into FX. But there are very few people who are actually joining every day, 24-25 people. um, I was expecting actually hundreds of people to join, because this exercise people have requested long time ago, and when I have done, people have not shown interest, and very few people will come. But I'm very, very happy that at least those 25, 30 people every day coming to this seminar, they are serious about it. And I'm more than happy to do interactive sessions with you guys from next week onward, um, so that you will be able to clear your doubts, and then we'll move forward. Having said that, uh, in terms of the development on Moyo, as you said, we are continuously doing some of the other thing around. Today, as I promised yesterday, today we are making signals live on our platform. So um, once it is all done and uploaded, I will probably be able to show you the signals on the platform. And that's a very important tool that we have developed, which I still believe that none of the copy trading platform is actually offering to their client, because majority of the copy trading firms have either done a tie-up with the trading signal providers, and they are based on subscription, and they are routing you directly to those providers, right? But I think what we have taken a slightly different approach, in a sense that we understand um, that most of the people who have joined from our community right now, the outer community still has to come in, which slowly and eventually it is developing. That a lot of other traders we are bringing on board, and some new people have joined recently as well. But yes, I think it is important that um, trading signals are something which I feel that for right now, for you guys, after learning this stuff, and then when we give you the trading signals on the platform, I think if you start doing the analysis at your end, then once you do the analysis, and at the same time when you get the signal, I think that becomes really very, very easy for you to understand whether the signals you are getting is right for you to execute on the platform or not. Signals are signals. At the end of the day, they are not a guaranteed signals. They are just a help that we will provide to all our investors and all our traders, so that they can also get some more extra cushion from us, so that their trading style and their trading behaviors improves, and a lot of people who are following them can also make good money out of it. So we will help as much as we can through our platform. So it's a very intelligently designed tool, um, and I think this will probably also put us in a different spotlight altogether, because when you go and do the marketing of Moyo to all the investors who you are trying to do, you can also now pitch them and say that, look, apart from you being trading, following someone on the Moyo platform, uh, you will also get an extra help from the company, where company will provide you with the signals, and those signals are more or less automated trading. The only thing you have to do is you have to click the trade and just enter the lot size and execute the trade. That's it. The only thing an investor has to do is, as soon as you click on the signal, it will ask you to enter the lot size, and just click place the trade, and the trade will be placed. Correct stop loss, correct take profit, signal providers will give it to you. Okay, and then you don't have to actually enter the stop losses. So the signal always comes with the stop losses and take profits, which is very good for you to understand that, you don't have to do that. Um, so yeah, but this will be the extra feature that we'll be introducing today, and then we'll go from there. In today's session, I'm probably be touching on two different parts, which again, today's session will be very, very important, because I'm covering two very essential part of the FX trading. One is the FX orders, the different type of orders that you guys are executing on the platform, and then I will also touch based on the charts today, um, a major charts that normally, the trends in the chart that you should follow in order to take a decision of which side of the market we should be going, right? So let's start with the type of forex order first today, and then we'll move on with the charts. Okay. So the first thing is, what is an order type basically? So orders, as you see, is nothing but you are actually uh, giving a consent on a platform to the broker that you want to buy a product on any particular price, right? And then based on that, orders are has different classifications, because it's a technical product. So it's a financial product. So of course, the orders that you are giving, the command that you are giving to the market, that I want to place an order to buy one lot of euro dollar, actually, is an order. But then, as I said, there are different classification in the order, where there is a market order, there is a pending orders, and there are different other type of orders. Right? First, we will understand what how many orders are there on a platform that you can execute actually. So first thing is a market order. What is market order? As a name itself says, it's a market order. That means you are actually placing a market order on a market terms. So whatever be the price of a product. So for example, if you look at my screen on the bottom, you say market order basically is an order to buy or sell as the best available price. Okay, so it's like you are buying a euro dollar and its current rate is 1.2140, right? And the ask price is 1.2142. So that means bid is 1.2140 and the ask is 1.2142, right? Then what will happen if you want to buy euro dollar? Then it would be sold at a price of 1.2140. So when you are clicking on market order, so that means if I go here and if I want to put a market order, right? If I click on this is a market order. So if I want to buy euro dollar, I click here. Now this is a market order which is executed at 1.815159. This is a market order, right? Pending order, as the name suggests, that A trader always put a pending order because he believes that the current market price will gonna either go up or go down, right? Depending on whether he wants to buy, then it should go up, sell, it should go down. And then based on that, you put the pending order that if the price is, for example, say 1.2140 euro dollar, I want to put a pending order on 1.2150. So as soon as the price reaches 1.2150, right, then the order will be executed because you are giving a pending order. Okay. If you look at this small diagram in the middle of the page, you will see it's a quick map which will define what sort of orders are available, right? So, of course, there are only two orders: either you buy by market or you sell by market, right? But then both buy and sell are further divided into two parts, right? So every buy order you can also put a limit. Every buy order you can also put a stop. Likewise, in every sell order, you can put a sell limit and you can put a sell stop. Okay. So limit and stop, these are the two different pending orders that you can put on every market order. Now, as I said, if we go, so we will try to understand how the limit order works, So whether it's a buy limit order or it's a sell limit order, we will try to understand. So a limit order, what is a limit order? First, we need to understand the definition. So the limit order is an order placed to either buy below the market or sell above the market at a certain price. Okay, that's the limit order. So you are saying that if the current market price is 1.500 euro dollar, okay, so that means you will put a buy limit below as soon as the price where it is standing goes down, right? Or go, if it goes, the price where where the order is standing, if the price goes above that, you will put a buy limit. If the price goes below that, you put a sell limit. That's how it works. Okay. So you place a buy limit order to buy at or below a specified price. So if you look at the diagram where it says buy limit, right, you see a blue dot on the arrow. So that blue dot basically represents the current price. Okay. So now when you want to put a buy limit, that means as soon as the price goes below, right, below the price, and then as soon as it start going up, you will put a buy limit. So now when the price goes down and rebound, you put a buy limit. This is where your order will be executed. Sell on the uh, I will just hold on for 1 second. Sorry. Uh, yeah. So these two orders we need to understand: buy limit and a sell limit. Okay. And how does the buy limit work? You place a buy limit order to buy at or below a specified price, right? So you are saying that, for example, here, this is the blue dot is the current price. You're saying as soon as the price comes down, say 10 pip, okay, you put a buy limit here. And then from there, the price shows the upward trend, start going up, and you make money. On the other hand, when you're playing a sell limit order to sell at a specified price or better, that means you're saying sell price is here. As soon as it goes up, you put a sell limit, because from there the trend will start to go down and you will make money. Okay, that's how you put a sell limit and a buy limit, right? So and once the market automatically reaches the price limit, the order is triggered and executed as a limit price or a better price, you can say, right? And you will look at, when you look at this image, you will see that, you will notice that green line is below the current price, right? Or the red line is above the, in the case of buy, the green line is below the current price, and in the case of sell limit, the red line is above the current price, right? So that means, when that means from here the price will become more favorable, and then you will start making money because buy limit will kick in, right? So let's, if we take an example, for example here, so if you take an example of euro dollar is currently trading at say 1.2050. This is the current market price for euro dollar. Now you want to go short. Short means you want to sell. You want to sell if the price reaches 1.2070. Normally what happen is, you have to wait and watch to see if the price goes from 1.2050 to 1.2070. Then you place an order. But with the help of the limit orders, it becomes very easy, because you are actually defining the limit in advance and saying that as soon as the market reaches to this point, my buy limit order or my sell limit order get executed, and that from there, the, you know that the trend will move up. Your order automatically system will place, you will actually place the order in advance, and as soon as the market hits that level, right, your order becomes active. So you are actually placing an order at green in case of say buy limit, and in red in case of sell limit. So as soon as the market touches that price level in both the cases, this is where the order executed, and then from there further you start making money on the limit. So limit order is plays a very important role for many traders, because when you are trading in bulk on trading platform, one is, people do a market order, which is the most simplest version of trading, right? Because you look at the price, you execute an order, right? But then when you do the technical analysis, when you do the fundamental analysis, and you understand by the technical and the fundamental analysis that the market is likely to go up or the market is likely to go down, based on that you will also be able to place the limit orders. Okay. Other orders are buy stop and sell stop orders, right? Which is normally we use on a day-to-day basis on our market orders as well. When you put, and I always say that when you put a trade, always take your stop orders as well, stop losses as well, because stop losses and all those these things will always mitigate your risk. When you want to minimize your risk, you don't want to be blown away by the movement, massive movement in the market, because FX is really very volatile. So there are the advantages and there are disadvantages both associated with FX, right? So you always have to think about the worst scenario. Good scenarios are always there, because if the market is in your favor, you are actually making good money. But you always try to mitigate your risk by always keeping your stop losses, your take profit active with your trade, right? So what is buy stop then? Buy stops basically are more useful for those investors who actually believe in the technical and fundamental analysis, right? And from their technical and fundamental analysis, they have derived that if the market reaches to a certain price level, which is above the current level, then it will go further up. So you have already identified, you have done the technical analysis, you have seen the trend of that of euro dollar, that the trend for the last 3 months is showing that this will be, the market will keep going rising up, okay? Or the analysis shows that the market will further go down. And you've also done the fundamental analysis that because of the unemployment data coming out, it will weaken the dollar or it will strengthen the dollar. Based on that, you take your position in the market. So buy stop is for those investors who do a thorough technical and fundamental analysis, and they come to a point that if the market reaches a certain price level, right, which is above the market. So the current market price, say, is euro dollar is 1.500, to explain it in a simpler one, and you are putting a buy stop because you believe that the market will go up. So you are putting a buy stop, say 10 pip above the current market price, and you're saying that as soon as the market reaches 10 pip above the current market price, my buy stop order will get executed. Okay, because you believe that this market will further go up from there. Okay. So to explain it in a simpler term, if I go back to chart and I say, you can see there are different variants in the chart. Market here, for example, if you look, it goes down, it goes up, it goes down, it goes up, then it goes up, then it goes down. So there's always ups and down, ups and down, ups and down, ups and down. In the chart, it will always show you, right? So what you and the market is here, for example, on the sell side. Now you believe that the market from here probably will turn up, will show an upward trend. So as soon as the market will go upward trend, you will put a buy lot somewhere on the above the current market price, and this is where the from there the upward trend will start and you start making money. So you will, in a layman word, you understand, you are saying actually with your technical fundamental analysis that right now on my screen you are seeing that there's a red candle coming in. So now you feel with your analysis this red candle will break here, and from here the buy candle will start the upward trend. So this is where I want to put a buy stop loss order, right? So as you can see from the diagram, is what it says: order placed above price and keep the price going up. So the blue dot is the current price. You have put your buy stop here because you believe now from here the trend will start to go up, right? And stop order, or stops, whatever you call it, is an order after executing until the prices reach it to that stop price, right? So it will keep on executing until it reaches to that level. So what you do is you can actually use the stop order when you want to buy only after price rises to a stop price, or sell only after price falls to a stop price. But that's how it works. So just to avoid more confusion here, again, I will little bit try to explain easier. So buy stop basically is a stop order which is placed above the current market price, because you have now understood by the market analysis through technical and fundamental analysis that this is where the market will start to move up. So that means when you put your buy stop above the current market price, so in the first picture you see the buy stop, blue dot is the current price. So you're thinking that the price will go up. So at a certain level up, you have placed a buy stop. So as soon as the market started to move up, and as soon as it hits the price, the buy stop where you have put, okay, then your order becomes activated, and of course the market trend is going up. So from there you are making money until it hits your take profit. Likewise, it goes the other way around in the case of sell scenario, because when we are talking about sell, you are actually putting it below the market price, because sell always go below the market price. So you have put like 10 pip below or 5 pip below the current market price, your sell stop order, and says as soon as the market reaches that level, this price level, 5 pip down, my order gets activated, and from there you understand by the technical analysis that the market will further go down and your trade will keep making money until it hits the take profit on the lower side. thing. That's how it all works. So this is the buy stop and the sell stop. Stop loss order, there are other type of orders that we also use. Stop loss order, good till cancel, good for the day, one OCO, which is one cancel the others. That is also something that we use, the traders use on a daily basis. But the most popular one, of course, are the limits and orders: stop order, buy order, and stop loss order. Stop loss order is just a simple order which you are giving an instruction to the platform that if the market falls below a certain price level, this is where my order will get cut off. Okay. In case of in this case, order is not cutting off, it's executing, right? And in the case of stop loss, the order is will cut off. Why? Because you are defining a limit that I don't want to take any risk below this price. Okay. So if you are a long, means you are buying, okay, it is a sell stop loss. So, and if you are in a short, it will be a buy. It always keep in mind this: the stop loss is the other way around, right? So if you have taken a buy trade, then your stop loss will be on the sell side, because you are going buy means your trend will go up, okay, instead of going down. So what you do is you'll always put a stop loss below, because you know that when the market goes up, I make money, but as soon as it start to come down, my stop loss get hit. On the other way, on the other side, the sell order has a reverse mechanism, where when you are selling a position, that means if the position goes further down, 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 you are making money. But if the position, instead of going down, start to go up, then you are losing money. So you're actually putting the stop loss on the upper side, on the buy side, right? That's how the stop orders work. Good till cancel, we call it a GTC. Now, good till cancel, as it says, it's self-explanatory. That means that your order will remain active in the market until you decide to cancel it. Okay, so that means your broker, if you're putting a GTC order on our platform, your broker will not cancel the order at any time, because you have given the command that I will cancel the order. I want to take a risk. Let it go, let it go, let it go, let it go. You are instead of putting a stop loss, you're actually putting a GTC order, and that will keep the trade open. Even the market is going against you, but you still feel from your technical and fundamental analysis that eventually this market will go down, but it will reverse back and show the upward trend, and I will make money. So if I put a stop order, the system will automatically cut it off, because you are giving a confirmed command to the platform saying that my order gets cut off at this price. But good till cancel means until you pass on the instruction, the trade will keep moving, and until you intervene and you say, now I want to cancel it, because I feel now the market will not reverse, it will further incur more losses on. Good for the day, I think we don't use good for the day, we don't use GTC, but I'm just giving you a knowledge, because these things will be adding on our Moyo trading platform soon. So instead of MT4, we don't have GTC or GFT sort of orders. But it always good for the high end traders, because the high end traders always uses this. It's not very the retail investors are not very keen on good till cancel orders, because this is not what they are. They simply go with the stop loss order, because that protects their entire trade, right? So good for the day order remains active in the market until the end of the trading day. So you have specified on the platform, because the intraday market, you take in a position 9 a.m. UK time in the morning, and you want the trade to get open regardless whatever spikes comes on that particular hours and minute and second of the day. It keeps on the trade will be open until you have defined the specified end of the trading day. Okay, and you said that my trade get closed at 9 p.m. UKG and 9 p.m. GMT time. Until then, your trades will still keep running. Then comes the OCO, which is one cancel the other. Again, it says one, so you're putting two orders, which you're saying that either will execute, will cancel the other. Okay, so that's how it works. So the OCO basically is a combination of two orders, which is two entry or two stop loss orders. You are putting two stop loss order, or you're putting two entry orders, and you're saying that whichever reaches first, cancel the other. Okay, so let's take example. If the euro dollar price here, I've taken an example, is 1.2040, that means you either want to buy at 1.2095 over the resistance level in an anticipation that it will break out, or initiate a sell position if the price file falls below 1.2095. Okay, so the understanding is, if the order reaches 1.2095, your buy order will be triggered. So you are one cancel the other means you're actually giving command to the system saying that, I am sitting in middle, I am putting two trades, I'm entering a two orders. One is, I'm saying if the current price is say 1.2095 and the market moves up to 10 pip, you know my order get executed. At the same time, I'm also giving command that if the market goes down to 1.1985, my order get executed. So wherever the market reaches first, it will trigger that and cancel the other order. Okay, that's how the one cancel the other order works. So in conclusion, what we have learned out of the um, order types today, right? So the basic forex order types are market order, limit entry order, stop entry, stop loss, and trailing stops are usually most of the traders are using. Okay, so what we have learned today is we have learned about buy stop. Okay, what is buy stop? Again, buy stop to open a long position at a higher price than the current price. Keep in mind, buy stop means that you are actually taking a buy position at a higher price than a current price. So that means if the current price is 1.500 euro dollar, you are taking at 1.700. So that will be your buy stop. Sell stop, you are taking a short position, which is sell order, at a price lower than the current price. So the current price is 1.500. You're putting a sell stop and saying that the order get executed at 1.448, right? So then it becomes your sell stop order. Then buy limit. Okay, buy limit, you are opening a long position, that means a buy position at a price lower than the current price, right? So that means you are saying that as soon as the price, when you're putting a buy limit, you're saying that the current price is 1.500. If the market comes to 1.495, my buy limit get executed, because from here I believe that the market trend will go up. Okay, so you enter the price, you enter the order when you enter a buy limit order when the market goes below the current price, and then your order will be executed. Sell limit order, on the other way, is the reverse of buy limit. That means order is now placed above the current market price, because you know that once that my order will be executed at above the current market price, from there it will show the downward trend and I will make a money, right? So these are the four different order types that you are required to use on a day-to-day trading. um, you know and these type of orders people don't normally understand. It plays a very important role when you are actually trading, because once you understand how the buy stop works, or a sell stop works, or a buy limit order work, or a sell limit order work, you will be able to trade more frequently and in a much better way compared to just only executing a market order. Okay, so market order is not just the, normally people just do a market order. People don't go for the stop or the limit orders, the normal retail customers. So, but these limit orders are the key to the success if you understand these orders very well. So do practice these on your MT4 platform try to put a buy stop, buy, try to put a sell stop, try to put a buy limit, sell limit, and see how these things work in your favor. Okay, now it comes to we come to chart analysis now, and I think this is the most intermittent section of the today's seminar. Chart analysis, part of it I've already covered yesterday, which consists of fundamental analysis, which consists of technical analysis, which consists of sentimental analysis, right? And those things somewhere will help you to understand how the chart looks like and how you basically trade in a chart. So there are three basic concepts of trends in the chart. So what actually you look in a chart, you look three things in a chart. One is the upward trend. Of course, you will always say high, high. Okay, and then the downward trend, which is lower highs and lower lows. Okay, and then the third one is a sideways trend. That means it is a consolidation in when price moves sideways in a horizontal zone. So that means there is a sideways trend is basically a moment of a time in FX where the market actually comes in between resistance and support. So it doesn't show a very high high, or it doesn't show a very low low. It becomes sort of very stable, you can say. Although stable is not the right word, but still, for you to explain, stable means there's not too much volatility in the market, and the market just move left and right, sideways within that framework. Okay, so that becomes a sideways trend. In the uptrend, basically, what you have to understand, I will show you through the graph as well, that the uptrend basically is made of the ascending peaks and through. Ascending peaks means that the trade, you will see that the candles will show you the ascending peaks. Okay, for example, this line that you see, this is the upward trend. This is showing the ascending peak. So this high high. Okay, and then so we call it as a high high. So that means these two are actually meeting. In between they are not meeting, but this line that I have drawn, this red line of this green candle, which is touching this line, and it is touching this one. Okay, so this is two highs we have seen. Okay, um, and then we have not seen any lows. So that's the reason the market is not showing the upward trend. The market has gone upward, but it is showing the other way. That means the market has gone down. So the chart tells you that if the candle shows high high and low low equal time, I will show you how. Okay, so if you look at this one, this shows the upward trend, the uptrend, where you see from one candle to number two candle to number three candle, right? You're drawing a straight line, but then there's a diversion which shows that the trend, instead of going on one straight line, the trend from here has moved up. That means it is showing a upward trend. So most likely the market will keep rising up, and this will help you to actually um, take a better decision, right, on that side. So this is how high high and low low always works, right? Now, when you are looking at uptrend, it should be a long term, primary, and a major term. So the trend that you are looking for upward trend is the period is more than a year. So in more than a year, you are seeing that if the particular product in a year is showing an upward trend, and the time frame will be a monthly chart. You take a monthly chart and then you go back, and then because it's not just a one day analysis. You have to keep in mind that if you try to, and that's what I was trying to say, you pick up one product, you make a in-depth study, try to understand the inside out of it. That means you are telling yourself that let me understand the trend. I will look at the monthly chart, but I will go back to up to a year, okay, maybe year is too much for you, you go up to 3 months, 4 months, and see the trend, that how the trends, how many times the upward trend the chart has shown to you on euro dollar, for example. And that will give you a clear picture that what is the movement in the market for the last 3 months. The market is more on the buy side. You will understand if there are more upward trends, then the market were more on the buy side than the sell side, right? So this also give you some sort of probability study, that what is the ratio of upward against the downtrends, to make you understand that where the market is showing his sentiment, right? Second is the downtrend. Downtrend is the reverse of the uptrend, of course. Downtrend, in uptrend you are taking ascending peaks, and you are taking high and higher low, right? In the downward trend you are taking a descending peak. That means um, descending peaks means this is the descending peaks. So on the other case, you are actually taking the ascending peak. So from bottom to up it is going, and you are looking at the chart and seeing that what is the upward trend, right? But on the other case, you are taking a downward trend on the other side and see that from up to down how many times the market has come, you know. So that will help you to understand which way the market basically understands. So you look at the um, um, you always, rather I open my chart and say the upward trend, and I have this, you know, so this is the monthly chart, for example. And when you open a monthly chart, you probably try to do the analysis through it, or you can even take a, you know, a weekly chart as well. And weekly chart will always give you a more in-depth analysis than a monthly chart actually. And from here you can actually decide the upward trend. So in this case, if you look at this one, you know, this will show you right now the upward trend it is showing is from, sorry, so this is one upward trend, okay. Then you keep on going back and see whether it has shown any other upward trend in the last, you have to go week by week and look at the trend analysis in the chart. It's a cumbersome job, you know, to be honest. It's not like you just sit here and just look at one chart and then think, you know, how will I do the analysis? You have to be patient. You have to go week by week to first do a month analysis. You will have one something in your mind that what was the trend telling me. Then you go back further to one more month. You know, you don't have, as I said, uh, it's good always to go to have more analysis on the back data. But if you are not very reluctant to go too much on a back data, then at least 2 month or 2 month analysis of the market to for you to understand what was the trend it was showing in the market, right? So you keep drawing these line to show which candle has shown, you know, from upward trend, and which candle has shown the, you know, a downward trend. For example, here if you look at um, so you know, high and low, right? So you are seeing that there's a low downward trend and there's an upward trend, right? So this is the two trend you have seen. Now you go further back, and even if you don't do it, you're not able to do it on MT4, because MT4 charts are uh, more like a, you know, it's not very handy sometimes. But you can do the analysis of chart on any other thing, like you can go on trading view, for example, and you can do an analysis there. You can open a trading view chart. um, some charts are much better than MT4. So always don't rely on one particular thing, because charts are charts. Don't go, there's not a massive price difference, to be honest. There's never been a massive price difference. There's only a few, one or two pip difference in each and every broker to broker, but that doesn't sort of hamper your analysis on particular product, because what you are seeing is a trend analysis in the market, and that you can see with a better chart. Some companies only specifically, they are only building their charts for the people to do the technical analysis, right? And for them, it's most important. So you can probably always go and find, say for example, euro dollar chart here, and then this is the euro dollar chart, and then you can open a full featured chart on the page of trading view, and then you can do a thorough analysis from here, because this is, their data is very consistent. You can see as how the chart moves, right? And then you can see the trends in the market through this chart, that how many highs, how many lows it has shown, and then based on that you can probably will be able to define um, and be able to understand what will be the next move of the market. Well, so for the downward trends, you always have to look at the medium term, okay, and intermediate trends, right? Like 3 weeks to a month. That's it. So downward trends, you don't have to go back 3 months, 4 months data. To understand the downward trends, you always have to look at the 3 weeks to a month data to understand what was the, what was the movement in the market. And the time frame, you can see a weekly chart. In case of upward trend, you see a monthly chart. In case of downward trend, you always see a weekly chart to understand, to do the analysis of the downward trend of the particular asset class. When we talk about sideways trend, it's a consolidation when the price moves sideways in a horizontal range. I will show you in my graph how it works. And for this, you have to do a short term or a minor turn. Okay, that means anything less than 2 or 3 weeks. And for sideways trend, you always have to look at a daily chart. Where is the sideways trend going? Okay. So just to recap, for upward trend, what you need to keep in mind is basically ascending peaks, number one. Number two, there will be high and higher lows, right? And the time frame is probably a month. For downward trend, you will look at the descending peaks, lower highs and lower lows, and you will look at weekly time frame. For sideways, it's a consolidation of both upward and downward trend. And what you do is basically you look at the daily chart for sideways trend. Okay. Now let's little bit understand more in detail about upward trend. So upward trend, uptrend basically has a positive slope and is formed by connecting two or more low points. So obviously two or more low points. So that means you can pick up the two latest, as I said, low points, where in this scenario I have yeah, this thing, you can see this cell candle here, the red candle, it's actually connecting with this line, right? Okay. Or if you look at this here from here, you will try to match which um, let me open a minute chart. Yes, now, and from here we do the analysis of so-called the uptrend, where uptrend is saying that it is formed by connecting two or more low points. Okay, so we'll take two or more low points. So low points will be, in my scenario, I can see is here. Okay, right. So you are actually connecting these 2 points, or sometimes you do a small candle analysis as well. So it doesn't mean that you always have to look at the two biggest two line. No, you can also look at the nearest two candle, like this candle and this candle. You can look and you can understand that the trend will go up, and you can probably take a buy position from here. You can see the candles are actually going up until it starts reaching to come down, right? So this is the the normal upward trend um, in a in a chart. Okay. Also, we need to keep another thing in mind is the second low must be higher than the first for the line to have a positive slope upward trend. Okay, so that means this is another important factor for uptrend. We also need to understand is the second low must be higher. So that means this second low you can see here is actually higher than the first one, and of course the third one will be higher than the second one. Okay, to make it a perfect slope, then it will be an uptrend. Okay, so and this indicates that net demand is increasing even as the price is rising. So that means this is correlating to demand and supply. That means the demand is increasing. That's the reason the price is increasing, right? On the other hand, the downtrend will have a negative slope. So you take it from the upper side and you will look at the by connecting two or more high points. So two or more high points in this case will be um, yeah. Let me see if I can find. Oh, right. So this candle has actually shown an upward trend here, right? So this is ascending. On the other hand, we have to find the descending. So you can see there are very less descending trends, but you can still have a small descending trends as well. So it's not like, you always have to find a big two trend, but you look at this one, this is a descending trend, you know, then you will look at this, what are they doing here? And then you look at the other descending trend. Okay. So these trends are actually telling you where exactly the market is going, and then you will also keep on doing the upward trend analysis by just putting the lines here and then making it you know to understand. Now, when you keep on drawing these lines, you will understand what is how many downward trends, how many upward trends. So you get the probability ratio of where how the market actually is performing. This is how you do the candle analysis on a chart to basically take a decision on which way the market will move next, because then you will come out of 10, you have seen 7 times the market has moved upward trend and 3 times the market has moved downward trend. That means like it is 100% we are sure that this is euro dollar is a buying market at the moment on a weekly chart or a monthly chart, and then based on that you take a decision on which side you want to go, right? So this is a downward trend. Sideward trend is a consolidation. Normally people don't use it, but it's something which we will go through it to understand. Maybe some of you will like to understand what the sideways trend is basically. So it is used in technical analysis. First of all, that is where you do when you're doing a technical analysis, then you are trying to figure it out where are the sideways trend in the graph, to actually describe the movement of the asset price within a well-defined pattern. So in this case, and what it says basically, the important thing to understand is the upper and the lower bound of the Sitla. So let me make it bigger. So the point to remember is the upper and the lower bounds of the asset price creates the level of resistance. So here in this chart, you see the upper, right, and the lower. So if there is not a big candle move, like you can see here, there's a big candle move. You can see there's this patch, the movement is very stable. So it is where the sideward trend is going, for example. So if we find some sort of sideways trend, yes, you can see this is a sideways trend. I can see spot on here is So you can see this patch, right? This particular patch is basically where there was a market which is moving left and right, sideward and the horizontal actually. But you will see that the candle here is quite stable, and within a range. It's not like it started to move up after here and then goes up and goes up and goes up, and you cannot see this level of patch anywhere which we have drawn here. Maybe you go back still, this is also a sideward trend patch, because this perfect sideward trend patch, because here you see, uh, look at this patch. This is again a sideward trend patch. That means the market was quite stable out here, right? Right. So you keep on drawing these sideward uh, patches to see that there's a point, right, in the market where the market has touched the resistance and support level both, you know within the consolidation. So a resistance level is top end of the price pattern, while the support level is the lower end of the pattern, right? So this is the resistance, this upper line red, and this is a support, and the market is in between. The market has touched the resistance and touched the support both, and it becomes a sideways trend where the price here will stable. So now you will understand that when this sort of patch comes in, that means market is going to take a next big leap. Either will show an upward trend, or either it will show a downward trend. So this you will when you find these patches, you will understand that from the technical and fundamental analysis, the next move in the market will be up or down. And based on that fundamental analysis, basically, because this is technical analysis you have done here, sideways trend, but when you understand the fundamental analysis, okay, yeah, here the market has touched this resistance and support. Now Mr. President will actually announce a new manifesto where he will add XYZ thing, which will actually increase the employment ratio, or strengthen the US economy in some other way form. That means the dollar will become strong. That means here you will put a buy order, and then the trend will start to go up. Okay, that's how it works. And then the last thing which we normally do understand in the chart is the support and resistance level. The support and resistance level is very important. So support and resistance level represents the key juncture where the force of supply and demand meet in the financial. So when um, there's a space where the demand and supply come in conjunction to each other, that is the point which we technically call it as a support supply and support and resistance level, where supply is meeting the demand. So the prices are driven by either excessive supply, downward trend, or demand, upward trend. Okay, so the price of any asset class is driven by excessive supply down, or excessive demand up. So supply basically is a synonymous with bearish. So when and in this market, we always use two words very frequently. It's a bearish market or a bullish market. Okay, so bearish means it's a sell market, bullish means it's a buying market. So these two technical things also we need to keep in our mind when people talk to you. Oh, I think the market is quite bearish. So it's a sell market, that means, and if somebody says no, it's a bullish, that means the more demand generating, that has become a buying market. Okay, so this is how the demand and supply sometime is termed in effects as bearish and bullish market. As demand increases, price advances and a supply increases. When price decline, or when the supply and demand are equal, the price moves sideways. So actually the sideways trend is where the supply and demand are actually very close to each other. I have 10 glasses and 10 supply for glasses, and 10 people want to buy it, right? So that means there will be no acceleration in the price. So there always these patches you will find when demand and supply comes equal to each other. That is the market. When the market becomes a little bit cold, that's the patch where the trader looks at to then further define then what will be the next move, because right now the market is standing at standstill because the supply and demands are equal. And as soon as the next fundamental analysis comes through, either the demand will go up or supply will go up, and then based on demand and supply, either the market become a bearish market or a bullish market, right? Either the market has uptrend or a downtrend, and that's how traders always keep, a track on it, and then they decide how they want to place a trade. So these are the different analysis that you do when you basically, and I think these are the very key things for anyone to understand, because of course, these are more theoretical. Practically you understand when you now you understand the definitions, now you understand what sort of technical graphs are there. So now based on that, you guys can actually go on the chart, try to find those sideways patches, try to look around for the uptrend, try to look around for the downtrend, and then based on that, do the analysis through the chart. This will help you. And then later on, when we talk about Bollinger Band, we talk about ADX charts, we talk about different other charts, that also will help you to somewhere to do more detailed analysis on the uptrend and downtrend, because those sort of indicators, chart indicators, basically are quite very important. Because, for example, if you put a layer on, then once we do the analysis, we will understand what this layer, this line, you can see now this graphical graph representation is here like this. Now, this red line is basically MACD, which is actually telling you the trends, and you will understand through this one where the support and resistance is, how you're going to look at the different trends in the market, and then you make your decision. Right? So I think it's this is the end of today's webinar. So I've covered, just to recap again, today we have covered order type. So order types are buy limit, buy stop, sell limit, sell stop. I've explained you how buy limit, sell limit works. So you will be able to now place your buy limit and sell limit on the platform. I explained you how buy stop and sell stop works. Also, apart from that, other stop order like stop orders, good till cancel, or one cancel the other, also people use frequently. So now you understand how these orders actually work, right? And then in chart analysis, we have done the uptrend, downtrend, and the sideways trend. Uptrend, you will always look high and high lows. Downtrend, you always look at the descending peaks and low highs and low lows, right? Uptrend, you always look at the monthly chart. Downtrend, you always look at the weekly chart. And the sideways is where the demand and supply becomes equal. The small patches you will look around, and for that you always look at the daily chart to see those side trends. And from those side trends, you will then understand that where the market has moved most of the time. Whether after you do the analysis of sideways trend, you then see what are the patterns after that. Normally the pattern is, whenever there's a sideways trend comes in, market has gone up or market has gone down. Okay, and what are the factors that has affected those up and down, and then you do analysis on that. Then upward trend, I explained to you that from low to high, how the line actually goes like this. So you will be able to understand, and it shows an upward trend somehow. Then you will understand the market is basically more of a buying pattern market. And then down is on the other side. It's from descending. So from up to down, you will look at 1 2 3 4 that you can see in the graph, and then you decide that this is a downward trend. Sideways trend, as I said, when the supply and demand and the support and resistance meet each other at certain patch, that means from there the market will either rise up or rise or fall down, and then you can decide. Right. So I think this is enough for today. I've covered everything. Tomorrow we will see what we will. Tomorrow we will invite another trader from our community, because we want to share experience from the market analyst as well, but we also want to share some of the experience from our traders as well, and we give them chance to speak out their words, because many traders who are actually on Moyo at the moment, they are not actually speaking out because we don't have any other mode of making them speak out. So I think this is a better platform where let them share their experience, what they do, how they do, people are following them, and and etc etc. So I think this is a very good way of where you guys can, so you will be able to then understand how this all actually works. So I think this is very, very important thing. And let's look at our Moyo platform. I will quickly show you one last feature which we have developed today. So I think probably once we fully upload it, then you guys can start using it. And I think yeah. So what we have done is basically we have actually created a signals space area. I think probably they might be uploading it. That's the reason it's not loading right now. Um, I think probably I will be able to show you once the upload and stuff is finished, because otherwise I will not be able to show you. Um, but if you remember here, you will, when you see the market watch, you will see the um, sorry, what is you will see another section we have created, and that is basically a section of um, signals, right? So like just like alerts, you see there's an alert section, and then there will be a signal section. So alerts, you see, you when you create an alert, you can see all the alert. Likewise, on a signal section, you will see the signals as well. So once they upload it, I think it's not the right time to show you, because I know they have told me they're uploading it. So once they upload, then tomorrow when we do a session, we will go through it again, and I think by that time everything will be up and running, and then we will take it from there, right? So over to Bhavesh bhai, and then yeah, and then we'll touch base tomorrow again.
Yes, thank you, MJ, for today's webinar. And one more question, MJ. Tomorrow, are we doing Q&A, or we will be doing a Hindi webinar, and then Thursday Q&A?
I think Thursday basically is a Hindi and Urdu session.
Okay.
So Thursday, I think we will probably try to do it tomorrow, because half an hour we will have a discussion with the new with one trader, and half an hour we'll have a discussion with the
On the Q&A. So tomorrow we will be doing Q&A.
Yes, so tomorrow.
Okay. So thank you, MJ. Thank you, guys, for attending today's webinar. And so, as MJ said, tomorrow we'll be doing Q&A. So those who are attending on a daily basis, and if you have any questions, please do write them down. So tomorrow, it will be easy for you to ask a question and get the answer to your question. And this is the last week. We'll complete the basic of FX by end of this week. And from next week, we will not continue, as MJ said, but we will definitely will have a webinar where, we will try to interact with our investors, our traders, and any question that they have, we'll try to answer and still, educate you guys on a further basis, right? So we'll try to do different things and see how we can motivate everybody and try to bring more people, and help them join with us. Basically, reason we wanted to do this, as MJ is spending almost hour and a half every single day to just educate people, make sure they learn everything, then they applied what they have learned, right? And because many of our investor or the client that we have, they are not from the FX. Either they have a basic knowledge or they have just started. So these are the good session to come and join and learn about the FX and learn about Moyo. And definitely this will help them in the future, right? To become a better investor or better trader, right? So thank you once again for everyone, and thank you, MJ. And tomorrow we will connect on the same time. And please make sure many people do join. And out to the Africa team, I know Joseph and Moses, you guys are working really hard. So please try to bring more people. Doesn't matter they are part of the Moyo yet or not, or probably they after the session they might become a part of the Moyo. And also to the Joshua and other part of the countries, and also team from the India, please try to bring more of your downlines, so they will get benefit out of this, right? Just a half hour or 1 hour, tell them to come and join with us. So once again, thank you very much for joining on today's webinar, and we will see you tomorrow.
Yeah, and also please, one thing before you all go, just please bear in mind, I always say that in every, because no, normally people come and say that, there's a issue that the copy trading is not working and, stuff like that. I will always tell you guys every time, please, please, please check your criteria box, because you might have defined the criteria as 5 lot, as 4 lot, as 3 lot, whatever. And then what will happen is when you define the criteria and the criteria already hit, then the system will stop copying. And this is what exactly happens, and people don't realize that. And everybody thinks that it is not, the copy trade is not happening. So you keep on revisiting your, either you give a bigger numbers so that you don't face any problem. If you don't have, like, you cannot do it in a day-to-day basis, then I recommend that you guys should definitely, you know give a bigger criteria, so that you don't have to worry about these things every time, every now and then, because most of the time I've seen people are actually suffering, and it doesn't look very good, because if there's a genuine reason where it has not been copied because XYZ, because there's MT4 not connecting, or there's a connectivity issue, whatever, that's logical. Yes, of course I will. But most of the time people don't understand. There is an asset log. When you look at the asset log will exactly tell you the reason of why your trades has not been copied. Okay, and people are actually not checking the asset, the asset type, and that is one of the reason that most of us are actually facing a problem. And we always just just over get emotional with that, and then people say, it's not working, that's the reason, stuff like that. So please, I will say that all of you, make sure that when you are log into your account, and after logging to your account, always you can go to your criteria box, and in criteria box you can then check what's actually going on with your definition of the criteria, so that you should not miss out on anything that that you guys are just facing issues, and it just doesn't work like that, right? So please, I urge all my members to please kindly um, go through it once again. I will probably just trying to show you the signals as when I was showing you they were uploading, so I'm going to probably just need 1 or 2 more minutes. If I can see, I can show you the signals that have been created, so you guys can actually learn from us that what the new signals are going to do, and and how these new signals are going to help you guys in your day-to-day trading as well. So 1 second, hang on, and then I will probably see if I can quickly and entry price this, stop loss 68.30, take profit is 72, 68. We quickly check, just not going to take too much time, only 1-2 more minutes. So where's my screen gone? So they have uploaded, so now I can show you. Okay, so first of all, I will recommend that go to your dashboard, modify, go to your settings, and check these numbers, please, because I think these are the numbers when these numbers are filling out, the trades are not getting copied. So that's one of the reasons. Second, you know, second thing I wanted to show you is signals. Yes, sorry. So signals, you can see we have created one section of signal here. You can see there's one signal which I have just added. Okay, now when you click on that signal, this signal will automatically gives you the take profit and the stop loss which has been done. So when you click on this one, so it's a buy trade. Okay, you will see when you click on the signal will bring you back to this. You can see that the stop loss it already taken, take profit it has already taken, and by default, because it was a buy signal, so the buy button got enabled and you put a trade and the trade will get executed. Okay, that's how the signal will keep working. So you don't have to do anything. You click on the signal, you only change the lot size, whatever lot size you want to do. Click on the place button. So you look, 72 is a take profit, stop loss is 68.3. When you click on that, you can see stop loss 68.3, take profit 72. It was a buy order, so this button got enabled. You just need to enter what lot size you want. You place an order, and that's it. Your order is here, right? So this is how the signal will keep working. So you guys just need to understand how the signal works, and I think we will create a short video on that as well, because that's how um, the it's just a probably less than a second for you guys to execute the trade, because as soon as you get the signal, every day you get a signal, you get a line of signals here, you keep clicking on signal, you keep going back, on this page. If it's a if it's a sell signal, this box get enabled. If it's a buy signal, this box get enabled. This will automatically fill by the numbers which has come through. Lot size, you have to just enter lot size and put the place order. There you go, your trade is there, right? So this is a very, very smart feature that we have built on a platform for each and every investor that we have, or a trader. Anybody can use it, and this way we will keep bringing more and more third-party signal providers, and we're integrating it into our platform, and this will actually help you to make some more money out of it, because the signal, when we get signals, right signals we are trying to get, we're not just giving all the hanky-panky signal, we're not going to bombard you with those signals. We always try to bring the best signal and give it to you on a platform. Having said that, we are just providing this help. It doesn't mean that whatever we are giving you is 100% accurate. There's no accuracy in FX. It's just a help. But yes, instead of you going around and finding people, and some people are finding different signal provider, we will put the signal on our platform, which will further help you to execute the trade. Right. So thank you very much once again for listening to me, and we will meet tomorrow. Right, the webinar, and then we will tomorrow we will have another session with a trader, and then we will have a Q&A for whatever time period we will be having. We will take few questions from different people, and then I will try to answer those questions. Okay, thank you very much. Bye.